Okay, guys, for this video, we're going to talk a little bit about where to find stocks, how to qualify them, and how to enter them correctly. So I'm on here with Miss Sharonda Bay. She's been kind enough to let us record this one. So here's where we're at. You can find stocks in a number of places. One of the places is Yahoo Finance. And one of the ways that I like to find stocks is in what's trending. And I'll click on this empty space and I can see trending tickers, which will give me ideas of what's happening in the marketplace. What are people buying? Coinbase, that's cryptocurrencies. Meta is Facebook. Mara is tied to Bitcoin and mining. GBTC is probably the same thing. So, and this is Ethereum. So obviously what's trending here after hours, because after hours ends at 8 o'clock. For those of you that don't know, pre-market is 7 a.m. to 9:30, regular hours 9:30 to 4, after hours 4 o'clock to 8 o'clock. It's 8:26. So what's trending right now is coin related, Bitcoin related. But during the regular session or pre-market, I can find a number of stocks that may be of interest. If I click on the finance section, I can see what some of the news is as far as what's going on. And if I have any sort of stocks that I've been watching, or I can certainly create and customize a portfolio, I can put that information over here. So, and then if I'm looking for, specific things about the markets themselves, whether they're earnings coming up, splits, initial public offerings, it gives me a nice little calendar. And it's really a lot of helpful information on a number of these platforms. Today is the Wednesday. Tomorrow is Thursday. I can go and see what economic events there are, how many different stocks have earnings that are going to be reported tomorrow. And I can help position myself, financially if I choose to participate in something I believe may go up that will make me money. So Yahoo Finance, Yahoo, and Yahoo Markets is a good place to start. Another great place to find stocks to buy is in Bar Chart. And Bar Chart, wherever it is, I guess I'll have to pull it up because I thought I had it up already. Bar Chart. Bar Chart. So Bar Chart has tons of information for you again. And if you click on the stocks section, it breaks it down for you, like their top 100 stocks, the surprises of the day, new highs, new lows. All of these different things have ways that you trade it. I love percentage gainers. If I click on percentage change, that is, I can find stocks that have gone up, by a healthy amount today. And then I can put them on a list, in a watch list, and I can begin to evaluate these names in case maybe they pull back or maybe they continue to go higher. But these names are in play, and you can tell by the percentage gain today. If you have money in a mutual fund company and you have it in your 401k for the year, you're probably going to get 20-something% for the year. These stocks have moved 20-something% for the day. So the opportunity to make a lot of money trading stocks, moving money, is so much greater buying individual securities than it is buying a basket full of stocks that are professionally managed in a 401k. Nothing wrong with a 401k, lots of value to a tax sheltered scenario, but buying individual securities will change your life when you do it well. So a lot of these names. So if I'm also looking for maybe stocks that are down a bunch, and maybe there's a good reason, or maybe there's not a great reason, I can find stocks that may be looking to possibly rebound from it being lower. And I can see that for today, or I can see that over 5 days or a month. And it can give me a sense of what is going on. pre-market trading, post-market trading. I love volume advances because volume advances, what do you think that tells you, Sharonda? If the volume on a stock has really gone up, what do you think that possibly means?
That means your money's gone up.
Possibly. So here's a two different schools of thought, Sharonda. If the volume has skyrocketed, maybe a lot of people, like you're saying, have come in and the value of those shares probably has gone up. But it also could be the volume has gone up because the stock has bad news and people are selling. Like this stock
Oh,
was down 37%. So looking at volume advances, I may find some things that are going on. So when we look at volume advances here, look at this. The volume percentage change today is almost 2,000% from how many shares normally trade. Like here's 700, 7 times what it normally trades. But like in this one, the volume was almost 10 times what it normally trades, but the stock's down 37%. So we've got to be able to learn how to chew through information, look at what stocks are doing, and decide on whether, hey, is this a buying opportunity for this particular stock or is it not? And it may be going down further.
mhm.
So tons and tons of information in bar chart. If I'm looking for something very specific, maybe I'm looking at AI stocks or blockchain stocks or energy stocks or weed stocks or whatever, it'll break it down by category. Maybe I'm looking for oil stocks. The war was going on, when the Russia went across the border against the Ukrainians. Oil stocks leading up to it were going through the roof.
Yeah.
It was just a play. So gold stocks have done very, very well over the last couple of years because of the changing environment with the dollar and crypto and the BRICS nations, Brazil, Russia, India, China, and South Africa, they're already formed to start their own currency and they're trading amongst those countries. And there are a number of other countries, I think about 40 of them, that want to be a part of the BRICS nations. So, having the dollar, having something more tangible than the dollar that keeps getting printed, like a printing machine here in the
Yeah.
US, gold prices have gone up. Things are going to be more tied towards gold. So anyway, bar chart is a big deal. Let me show you a couple of more. Let's take a look at FinViz probably. Let's see here. FinViz. There's FinViz. Okay. Won't show you all. There's a number of them, number of places where you can find information on stocks, where to find names. They have a screener on here that will allow you to put in certain parameters or criteria that you're looking for. If you're looking for, shares that are outstanding that are under 20 million, it's a smaller company. And if you're looking if they, issue a dividend or, the average volume is blank, as you get used to all of these moving parts, and believe me, it's really not overwhelming. If it's new to you, it may seem overwhelming, but as you get into it, you're like, oh, that's all that is. That's all that is. And so it will spit out a list of names through this screener/scanner that will help you find names that meet your criteria. So we'll stop there with the finding. So you have FinViz, you have Yahoo Finance, and you have Bar Chart. Of course, you also have TD Ameritrade, right? So
Right.
TD Ameritrade is what we looked at earlier with the screener. There are a lot of places to find stocks, CNBC News, message boards, all the platforms, Investors Business Daily. I mean, it goes on and on and on. So there's no shortage of finding stocks. So once you found stocks that met your criteria, and this is a very just 3,000-foot general overview, we'll take a deep
Right.
dive later, you want to qualify these names. So find them. If you're writing this down at home, find them first, qualify them second. And how I typically qualify names is I need to find out what we look like technically and fundamentally. The first part we'll look at will be technically. Technically, Sharonda, and for those of you listening at home, watching this later as we grow this group, there are very fundamental things in technical analysis. The first thing is we're looking at, you can still hear me, Sharonda?
Yes. Mhm.
Can you say something?
Yes. Can you
Okay,
hear
hold
me?
on, let me get the speaker back on. I don't know why I did that. Let's see, hold on one second. Okay, can you still hear me?
Yes.
There we go. Okay, very good. So the first thing we want to look at is, what is all of this? These things are candles. They look like candles, right? And this part of the candle is what we call the wick. And this part of the candle is the main body of the candle. And so when we're looking at candles, this is a Japanese system that was coined many, many years ago that the Americans picked up. Here's what each candle represents. And we'll look at a daily candle. And I'll make this bigger so you can see it. All right, so up here, what you're looking at is the date, the open of the share price on this particular date, the high, the low, and the close. Those are the main things we deal with. This R and this Y, I don't know what that is. It's probably something as it relates to the yearly something. Let's see here. I don't know. It doesn't even matter to me right now. But so if I hover over this candle, this corner right here is the open. So it opened right here at 378. And I can't, I'm just gonna opened at 378, which looks weird because it says it's 382.
It's 380. It looks like 382.
Right. So let me use this as an example. It's kind of weird. So I don't know if it gapped up. Let's check this open. It opened at, yeah, this corner here is 376. I'm just not right on the corner.
Okay.
This is telling you this candle opened at almost 377. If I can get it right. They got to square it off. 377, but it still seems a little bit off. The high for this particular candle is 380. So I hover over that, you can see the 380 to the right. The low is down here, this wick, at 376.2. I'm not exactly on it, but 376.2. And the close is right here of 378.61. So here's where what is this right here? Open, this is, okay, yeah. Just run it back. The open is right here in this corner. Open, the high, the low, and the close right there. Open, high, low, close. I usually always start from the left. You can tell I'm tired. So it tells you different corners. And that helps you, just looking at it, you can see that this thing on this particular day ran up a little bit higher, but then it ended up settling in and closed at 378. So candlesticks will help you get an idea of how something is trading versus little bars or little lines, because you could have lines that show this, like this will be a line going across, then you get the spike, and down a line and a spike. So candlesticks paint you a picture that you can see a little bit better. So when you're looking at technical analysis, you have trend lines. So this stock is in an uptrend. Can we see how it hugs this right here going up?
Yes.
In an uptrend. And then this clearly is in a downtrend, right? I can either do red to red. I usually just ideally like to do green to green, but if this is the top part of it, I'm going to use this corner and I'm going to work it down. And you can see how it just kind of held this trend line. Once I got a couple of different spots, maybe initially, the trend line started here and say this was the day we were on and we didn't know what was going on this day, but then we kind of snapped back. But once we get a, 2 or 3 good points, we can see where the trend line was. And then this dove down, and different candles have different names. Now, this particular candle looks like what? Like a hammer, almost like an ice pick. And what this is showing you, you can see it. that this stock was actually way down here below, but clearly investors came in and bought it up and it finished almost at the top part of the day, right? So just looking at it, you're like, oh, I see how that would mean that. It was way down here and investors brought this thing right back up towards the top part of the trading day. So, but we were still within this downtrend, right? The
Yes.
next day it opened a little bit lower. See, we closed at 369. The next day it opened at 366, which was this corner here. So we gapped down. We opened lower. People probably took a little bit of profits for the folks that bought down in here. Maybe, you know, they just, I don't know, it just opened lower. I don't know if the reason might have been, maybe there'd been some news. But by the end of the trading day, we're starting to go through this downward trend line. And the rule is, and we'll just keep it really basic, the rule is you need to have, to confirm a break of a trend line, it needs to close 5% above the trend line with good volume. So that'll be a rule that you'll eventually write down. And we'll look here. The trend line was at 370. And the question you'd ask yourself, did the stock close 5% above the trend line with good volume? Good volume meaning, you know, a scenario maybe like that, where it wasn't very large, but you know, buying came in. So a good volume day. So we really didn't have necessarily a good volume day. Just okay, right? It's lower than previous days. And at 370, roughly, we'll call it 5% above 370 is 388. So we'd ask ourselves, did the stock close at 388, which would be confirming the bust above the trend line? It did not. It closed at 372. So we're like, you know, it really hasn't broken through the trend. We still certainly could have made money in here, but we're not through this downtrend. Then we went sideways. And going sideways, you guys, in a bit of a range is called being in a channel, like a railroad track, on a railroad track, if you look at it that way. And these are the things on the railroad track. And you can clearly see this stock is in a channel. Look at it. It's between this area and this area, and it hits it and it doesn't break through, and it goes down and it hits the bottom. And then it goes up and it tries to break through, but we're not closing 5% above a resistance level. And then we're back in the channel. So the stock is in a channel. This is Microsoft we're looking at. So anytime, rule number one, if you're going to buy a breakout, it needs to be 5% above the resistance level with good volume. It needs to close the time frame 5% above resistance with good volume. So we start to look at technical analysis. And the first thing I always tell my guys and gals is to look at the stock in all time frames. So Sharonda, looking at right here is the time frame: monthly, weekly, daily, hourly. And of course, there are lower time frames and all different kinds of time frames. But here are the key 4 time frames I like to look at when I'm looking at a stock. Looking at this, Sharonda, in the very general sense, what is this stock doing? Is it going up or down?
Well,
What's it been doing?
so I'm looking at the bar charts. Is that okay?
Oh,
The
no,
blue-
no, no.
Oh.
No wonder you can't see what I'm saying. Hold on, hold on. We need to be looking at, gosh, I apologize. You're looking at something, and my apologies. We're looking at, and so let me run back through it. Candles. Here is the information that you probably did not see, and my apologies. So if I'm looking at this candle, the date, the open, the high, the low, and the close are all up here. So I'll make this bigger. If I'm looking at this candle, the open is this corner. We opened the stock at 306.97, and you see that right in here. So the open is this corner.
Yes.
The high is this top of this wick at 335.94. Of course, I'm not hovering exactly over it. The low is this wick and the close is this corner. So the candlestick shows you different things. So when we look at the stock in 4 different time frames, because we're talking technically now, so we have technically and then fundamentally, which we will get to before 9. What does this look like it's doing, Sharonda? In general, over the months, is it going up or down?
It looks like it's going up.
Right, certainly going up, right? So we were channeling, which you did not see, and I apologize, the stock here going across stock was in a bit of a channel for months. So we were here, Sharonda. We were high, it was up here, low was down here around this line, and we went up and we didn't get through that line again, right? The next month we didn't get through that line, and we were in the middle, and then we broke through it, but we didn't close above it. So the rule is, and it's probably more like right in here, a little bit lower, is it needs to break through resistance. If you're looking at resistance and support, 2 different terms, resistance and support. When a stock has resistance, it can't break through something. When it has support, it's bouncing off of it. It's not going lower than that. So they may break through support and resistance a little bit, but it doesn't close below this line. See how it stays in there? And even when it went above it, nope, it still went right back in it. So
Gotcha.
it was in this channel. And then finally, what came along, what did I say? We needed 5% above with good volume. Well, clearly there's a volume spike here. It's higher than it's normally been volume-wise. These lines are volume lines. And if I hover over right here, it'll tell me the volume, 747 million, et cetera, et cetera. You can see the volume for the month because we're looking at a monthly chart. And so the resistance line was about at 257, right? 81, roughly. Let's call it 257. 257 times 105% is roughly 270. So this stock, to confirm that it's making a new pattern and going higher and breaking through the overhead resistance, it needed to trade and close the time frame, which is the month, by 5% above the resistance level, which was about 257. So we needed to close at 270. The stock closed at 288. So it met that criteria, right? And guess what happened after that? Closed above that resistance level with good volume by 5%, closing the time frame, stock started to go up. And so we had a uptrend line. So for 4 months, Microsoft went up. Only thing you had to do, Sharonda, was buy the break at 270. You bought it at 270. You said it met the rules, and I'm going to buy it. And then 4 months, 3 more months later, because this is somewhere in the middle of the month, 3.5 months later, stock was at 338. Someone spent $5,000. They bought it at $270. They bought 18.5 shares times, if they sold it somewhere around 338 times 338, their $5,000 is worth $62.59. And so that is a gain of 1,259 divided into the $5,000 you spent. You made 25% on your money in 3.5 months.
Wow.
And so if you did that every 3.5 months, making 25% to make that a year, you did that, 3 more times. You did it once, you did it 3 more times to make a year. Certainly $5,000. We'll use this one. Make it a little easier on the phone. $5,000 times 125%. Once, twice, 3, 4. Your $5,000 is now $12,207. So you didn't quite triple your money, but I can assure you that is far more money than you're going to make in your mutual fund, because mutual funds don't triple usually. So, and that's a great way to grow money. But then the goal is, how do I make 25%, say, in a month versus 3 months or 3.5 months? how do I make 25% in 2 weeks? And if I'm good at doing that every couple of weeks, then money really grows. So to end this sort of basic sort of lesson on technical analysis, we have channels, we have candlesticks, we have where it opens high, low, and closes, and all of that's up here. We have confirming breakouts of something, of it's a trend line.
Right.
5% above where the trend line is with good volume, closing that time frame. And if it did this right here, Sharonda, and it started to go, and you're like, oh, it's gone. It's not 5% above, it's at 265. And then you got a head fake and it was right back down in it. And you're actually losing money now.
Oh,
So I get head fakes because sometimes I just don't wait. But this is the rule to safeguard your money. 5%. You'd rather buy it higher than get the head fake like this. You'd rather be sure that your money is about ready to go at 270 and then it goes versus you being down 10% on your money because you bought it up here and it didn't go and now it's at 245 back in the channel. So you have uptrend lines. Then what we do again, we pretty much channeled, right? Look at this right in here. You can see it. We went sideways. We're in this channel. And then what's the rule? 5%. You say, right? This was a 338. 338 roughly times 105% is 355. So 355 is right in here. You're like, I'm going to buy the 355. So if I had 5 grand, I'm going to buy the break divided by 355. I buy 14 shares and some change. And then it topped out somewhere around 384. We won't say you got the top, say you got 380 times 380 because it started to slow down. Your 5,000 is now 5,352. So not quite 10%, more like 7%, but you got 7% on your money once you got the break. So, and to see that more clearly, this is November and this is November. So that was the 355 break. We're looking over here at the weekly. 355 was the start of this week right here. 355. So literally you had to wait then 3 weeks to get your money because if you bought it right here, you had to wait 1 more week, 2 and 3.
right.
So what this is, and you're not going to remember all this stuff, this represents a bit of a doji. A doji looks in the purest sense kind of like this line here, long wick, longer wick, really like this one, long wick, skinny body. And that represents indecision because you're in the middle, right? Makes sense. The high was here, the low was here, and most of the trading is right here. They're not quite sure what they want to do. So when the stock ran from 315 up to 384 and people were up about 25% on their money in about 9 weeks, when it started to top out up here, folks weren't quite sure. Is it going to go higher, lower? The trading, the battle between the bulls and the bears was at a bit of a standstill. And then guess what we did? What's the C word?
It's 5% above.
No, I know that one, but what's this thing I'm doing right here? What's it in? What's this trading in?
Oh, that's
starts with a C. It's in a channel.
Oh, channel. Just
yeah,
like it's
in a channel. You can see it's in a channel, right?
Yeah.
It's in this channel. It's just sideways trading for weeks. 1, 2, 3, 6, 7, 8, 9. And then finally it's trying to come out of this channel, but we're still in the week right now because tomorrow's Thursday. We have 2 more days to see if Microsoft is going to bust out of this channel. We need some volume, right? Because the volume's really not there. Volume is, we need the volume to come in, and it probably will. And we'll see if it busts out of this channel to move higher. Because here's the month that we're in, the month of January. Here's the week that we're in. We're in the 2nd week.
Right.
And is it going to bust out of this channel? So there'll be key strategies that the simplest ones, this is the simplest one to help you learn buying breakouts. You get good at buying breakouts, follow the rules, you're going to tend to make money. But we'll spend 5 more minutes because I know we got a little bit of a later start. So technical analysis, and you're kind of putting some things together technically, and there's a lot more to it.
Yeah.
But the fundamentals are simple. News kind of falls into the fundamental analysis. What's the story on Microsoft? Are they have earnings soon? Do they come out with a new product? What's some of the fundamentals? What are earnings like? The fundamentals. And so when I dive into fundamentals on, say, Microsoft, it will be, we would be looking at, let me get to it. I don't want to give you too much because then it'll blow your head up and you'll be like, right. So we'll give this, we'll
I'm
wrap
a
it.
newbie.
You're right, right. Don't be giving you too much. He's like, oh, it sounds overwhelming. And
No, I realize it's
basic.
something new.
You almost feel like it wasn't, but it's really basic, a lot of the stuff. It's just a matter once you get comfortable with what you're looking at. Go to Microsoft. Let me see if my speaker's still on. Can you still hear me?
Yes.
Let's see here. Now you can still hear me, yes?
Yes.
Okay, you see the Yahoo Finance?
Yes.
Okay, last thing. So what I like to look at for some of the fundamentals on Microsoft, and remember, technical versus fundamental. I like to, for number one, I want to see what my computer keeps beeping. Can you still hear me?
Yes.
Hold on. Can you hear me now?
Yes.
You can hear me now?
Yes.
Okay, good. Sorry. I had to unplug one of these monitors. It's getting on my nerves. I like to see what volume looks like. Remember, we talked about volume advances, and I just want to see what it kind of looks like. It's pretty consistent. It's in the 20s. Like the last 7 days, it's in the 20 plus millions. Then we were in the teens, we're in the 20s. So we had a volume spike right here, 78 million. So there's probably some news in there. But for the most part, 20s, some 30s.
And pretty consistent.
Yeah.
For the
So I
most
like to
part.
see if there's anything, different about the volume. And then, sometimes I might click on the profile just to see, where they're located. Do they have a website? Full-time employees, just kind of take a peek at that.
Right.
But I don't really spend too much time there. Main place I like to spend time is in the stats. I like to see enterprise value, price to book, price to sales. I like to take a peek at that. But the main things I'm looking at, I want to see what revenue looks like. Is the company growing? Return on assets, 14%, return on equity, almost 40%. Quarterly year-over-year revenue growth. So year-over-year, they grew about 13%. I like to see that they have earnings before interest, taxes, depreciation, and amortization. Just kind of looking, what kind of cash, excuse me, do they have? These guys have $144 billion in cash.
Wow.
Right. I want to see what kind of debt they have. I'm always looking for cash to debt ratios.
Okay.
Like if they only had like this is a smaller company, they had $1 million in cash, but they had $20 million in debt. I'm like,
That's not good.
no, they may be doing an offering where they need to issue shares to raise money, which will
Right.
lower typically the value of the shares where they're trading because they need to raise money. Like to occasionally peek at book value. Book value says about $30 a share. The stock's trading how many times book? Stocks in the 300s or wherever the stock is. And that may be high or low for their industry. I don't know. But the other thing I like to really look at, I like to see what the share structure looks like. How much of the float is out there. So you have three things. You have authorized shares. How many shares are you authorized to put out there? You have shares that are outstanding. How many shares are actually out there that are being possibly traded? And then you have the float. The float is what shares are out there less insider ownership and institutional ownership. So the float is, in this particular case, the float is 7 billion shares that are out there. And, institutions own the vast majority of all of this. And sometimes what I glean from that is, typically mutual fund companies are not really overly selling their stuff, throughout the day to day. They usually take positions in companies and they let it play out if they like the prospects. And then they usually don't make any changes. It might be a quarterly change. It might be, something negative happened and they're switching it out during the year because their job is to show returns for people like Sharonda and all these people in 401ks and all the rest of it, so that all of these mutual funds work well. So if I think about the majority of the float, 73% is tied up, what is left after the 73%? Because most of this is probably not getting traded. And then how does the volume, the 20, 30 million every day, affect the float? Is the volume great enough to have an effect on the float that's left? And in this case, bigger companies tend to move like elephants unless the share structure is really good. An example of share structure that's really pretty good is like Netflix, big company. The share structure is better and they can move. They're more nimble. Look at the share structure here, not billions, 431 million. And of the 431 million, 84% of it's owned by institutions. So that really only leaves like a 431 times 0.84 is 362 minus the 431. Really leaves about 69 million shares that are really being bandied about. Because a lot of times, these guys and gals are not really selling this stuff. But because Netflix moves more, they're probably more inclined to move the money when they get the money. And you would see that their stock price, the movement is more volatile than like a Microsoft, because Microsoft's a big, slower elephant, where Netflix, although it's a big company, their share structure is different. They move more like a lion or something. They can move if they have to move.
Gotcha.
So all of that, and we'll close, all of that, Sharonda, we take into account when we look at what we're going to buy. And we'll get to the entering part during the next time. So we want to find the right stocks. We'll dive into it. We want to qualify the stocks. Is this the kind of stock I want to be in based on a bunch of moving things? And then I need to enter it correctly. How much money am I going to spend? Where am I? What price point am I going to spend it? And we'll figure all that out through technical analysis, and we marry these things up to arrive at, this is what I'm going to do for these reasons, and here's how I'm going to buy it, here's how I'm going to protect it, and here's what I hope to gain from it. So that whole system, it seems to be busy. It goes by super fast, right? When you're used to it, you're like, boom, 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 boom. Here's what I'm doing. Done, check, done, boom, go. And it doesn't take that long. So we're going to get off.
Okay, good.
Sometimes I'm long-winded. I apologize.
Okay. You're still recording, by the way, too.
Yes, thank you. And I'm going to stop the recording. Thank you.